All right, what is going on, y'all? It is your boy Nylock Get Money, bringing you another episode of Road to 100K. This should be episode 4. It is currently May 31st, 2026, which is perfect because we do these recaps at the end of every month, and it is literally Sunday, so markets are closed, and tomorrow we will get right back to it. So, perfect day to shoot, and this is also the day after Victor Wembanyama advanced to his first NBA Finals. So, this is a great point in my life to remember where I was at with my money and also the GOAT trajectory of Victor Wembanyama. Okay, anyway, let's get into the video. So again, we'll always start off with the Roth first. So the M1 Finance account, we'll just check it out, see how it's going. And then I'll tell you exactly, again, like last month, I'll tell you what I bought this month, as well as I haven't been telling you guys exactly how it's been performing. Like I've been showing you guys like the numbers, but I haven't really gotten into detail. So I'm going to try and do it better this time. So let's just get into it. Our M1 net worth, i.e. the M1 Finance account, is at $27,319.55. So go to the month tab. It is saying this is about a 4.85% return this month, which is really nice. Again, if you're in the markets right now, you kind of know like everything's pretty much going up right now, and we'll kind of get into that later. But you know, it's been a good month overall. May was pretty solid. S&P was up. QQQ was really up. And yeah, just overall, if you're in like pretty basic stock market, money caps, ETFs, I don't know why I said money caps, you should be doing okay. Again, there's obviously not every stock has gone up this month, but so real quickly, I will go over each of my buys. So on May 5th, I bought $100 in Meta. Share price 602. On May 7th, I bought $200 into Microsoft. May 8th, I bought $100 in Meta. I got a dividend from Blackstone, so I just put that back into itself. Same with Apple, or I'm sorry, American Express, that is. Again, I don't really count the dividends because, again, if I get a dividend, I'm going to just put it back into the underlying stock. Like, that's not money that I've really put in. It's just made. So, like, it'll go towards what I made. Obviously, like I've made money in the stock market, so that'll go through that, but I'm not counting it as like my deposit because again, it doesn't count as it like if you're funding your Roth IRA, your dividends don't count as funding it because you can only put up to $7,500 a year. So if it doesn't count to that, I'm not counting it. American Express $100 on May 13th. May 19th, I got $100 in Meta. I'm making sure I didn't go. If I messed up, I might fix it on the screen. Anyway, nothing into the strictly VU or like Google or Amazon. I'm one of those people where it's hard to like invest in stuff while it's high, but again, over the long term, it's really not a huge deal. Again, like VU in 10 years from now it's gonna be way higher than it is at the all-time highs right now, right? So like you got to think of it in that perspective, but it is just kind of one of those things mentally. It's hard to like go with that. That's why I'm still buying like companies I'm going to own forever anyway. Again, Microsoft and Meta, I just think that they're on a dip, and that's why I was buying them. I'm not mad at you for buying the VU at all-time highs right now. It's just like, again, it's a mental thing. But I'm still going to be buying VU. I'll probably put in some next month, but just at the moment I wasn't buying it. So, again, 20 years from now, I'll probably look back like, dude, you should put all your money in VU. Well, it is what it is. But right now, again, I think Meta is a good buy, Microsoft's a good buy, and American Express was a little bit on a dip, and it's more of a dividend, more safer company to me. So, again, I'm not mad at any of these buys. Again, the problem is when you start buying companies instead of VU that aren't, like, safer bets, right? Like, you start buying into stuff that, like, is more of a speculative, kind of thing. That's why, like, people right now, if you don't have a positive return rate this year, you're probably into companies, maybe not that you shouldn't be into, but like that's why it's nice to have that foundation. Again, I always preach that foundation before you start going into like your bets and your picks, right? Like if you just had all your money in VU or all your money in QQQ, you'd be doing better than me right now, right? Like you at least want to get what the market makes, or just like somewhere in between there, right? Obviously, like I have Tesla, I got Google, I got Meta. Like those are like technically down a little bit, but hopefully over the long term, they help boost the account. But, overall, you don't want to be all constantly below the Qs or constantly below the S&P 500 because then it's like, what are we doing? What are we doing? If you're not above them, like, just stick with them. So that's something to learn or something to know just over the long term. Like, if you're not constantly beating the S&P or the QQQ, I'm not going to lie, you might as well just put your money in that because would you rather make money or keep losing money? So that's kind of a Nylock tip for you guys. Real quick, I'll go over exactly. So I like this. They added a new, it's called concentration analyst. But I'll go to my holdings for my direct holdings, and it kind of gives it a more broken down. I mean, it looks pretty much similar to the other thing, but I kind of like how it's listed like this. It's just another way to look at it. But as you can see, I got almost 20% in Vanguard, 16% in Microsoft, 13.8% in Meta, Amazon 12%, Google 11%, 6% in Apple, 6% in Tesla, almost 6% in American Express, 5% in Blackstone, and then I don't know if you guys can see, but it's like 2.6% in gold, 1% in the high dividend ETF, and then $2 in the brokerage cash, which is from the individual account, which I haven't transferred over. It's probably just going to stay in there. Probably should just fix it. I don't care. But as you can see, that's kind of how I have it set up in my actual portfolio constant, like my target percentages. That's how you get your, that's how you buy. You make a pie and then you kind of like buy into it. But again, you can buy just individual stocks regardless on M1 Finance. But I like how it has it set up because it's more of a mental note for myself. So I'll real quickly go over what has performed pretty well this month. Again, like I said, the Vanguard ETF is up. So the Vanguard S&P 500 ETF is up 6.3%, which is $300 return for me, which is cool. Vanguard ETF high dividend is up $8, 3%, whatever. Google's up 8%, which is awesome. Meta is down 4%. Microsoft is up 6%. Amazon is up 3%. Tesla is up 17%. That's surprising. Tesla's up, or American Express is up 0.45%. Apple's up 16%. Wow, I didn't even notice that. Again, cool to see, but again, over time, we are just looking for that consistent basis. Again, we don't want to have stocks that like go up, but then they don't like compound, they don't grow, right? So I haven't been adding to my Apple position, but it is cool to see that it is still performing pretty well. Again, Google is a killer right now. Meta's down, but again, that's why I keep buying. I think Meta is gonna be fine in the long term. I'm bullish on them just overall. Shout out Joseph Carlson, kind of broke it down as well. But I don't know, Zuckerberg and like Meta again. Like Meta's everything. Like Instagram, Facebook, WhatsApp. Like they control they have a grip on everybody in the world. Like that's one of those things. Like it's one of those companies that just won't not have you on it. I guess like they're always gonna have users. Same with Google. Like Google is not going anywhere. Everyone's going to use Google. Like YouTube is one of the biggest things ever. I'm on YouTube making content for this shit. Like I don't do that for any other shit anyway. I guess that's not true, but you know what I mean. Microsoft, again, like Word, PCs, Windows, 360, like Microsoft's the GOAT. You're just not going to see a world without them. Amazon, again, I'm in these companies that I think are just going to be along for a very long time. So when they go on dips, I'm buying. When the SP's up, like I'm still buying, but it's going to be, I won't be getting as many shares because again, over long term, it's going to go up. So that's what the Roth is looking like. Again, really happy with the S&P. Like it is one of those things. I do think long term or like short term, it sucks for younger investors, younger people when the S&P and like stuff is like really high up, because it's like first you don't want to buy in because you're like, oh, it's so high, and then the worst case scenario, you buy in now, you put in a lot of money, and then it goes down or it crashes, all that stuff. So it's all playing a mind game with people, and I mean it is true. Like if it's at all-time highs, like you are buying less shares, but like everyone wants to get in at the lowest price possible. So when you see it at all-time highs, it feels kind of daunting to get in, which is I feel that. But there are a lot of videos online. Again, I watch a lot of videos from Joseph Carlson. JP Finance is really good. Why Learn, a lot of these people I watch videos from, but they break it down. It's pretty simple. Like look in the past 20 years, right, or the last 10 years, even the Google bubble, even the tariffs, COVID, like even when shit crashes, even if you bought in at the all-time highs right before COVID hit and you just held, you would have made your money back tenfold. You would have like 10 times your money. So it's one of those things where in hindsight, you would look back in 20 years like, dude, I should have bought it. I should have bought as much of it as I can, even at the all-time highs, right? So that's why I'm a big dollar cost average guy. A lot of people you watch on YouTube might tell you the same. Again, this is not financial advice. They're not giving financial advice, but it's just one of those things. It takes the thinking out of it. And that's kind of a life thing. Like, you want to take as much thinking out of the habits that you do that are good. If you have a barrier to anything, I got a barrier to YouTube, right? Like, I don't love shooting videos. I'm gonna be real. I don't love doing it, but I like making content. So it's one of those things where if I make it easier for myself, I will do it more. If you make investing easier for yourself, you'll do it more. So kind of went on a tangent there, but I just thought that was a good thing to bring up. And yeah, so the Roth is looking good, pretty healthy, about a 5% return. And yeah, that's pretty dope. So I will see you on Robinhood. We are on the Robinhood. Just making sure, again, these all line up. See, again, this is why it's so good to do this shit on a non-market day, because it's not fluctuating up and down. Look, see, you guys are learning and growing with me as we do this, all right? First episode was all over the place. Now look at us. Who would have thought? All right, Robinhood account is sitting at $16,204.65. They're saying that is about a 3% return from last month. I'm up about $455. Again, that's okay. Not great, not amazing. I'm very hard on myself when it comes to investing, because I always think, again, if you're not, I don't want to be the guy who's thinking he's the GOAT at making stock picks, and then he loses about 50% year over year, and while the market is booming, right? Like, so if I go to QQQ, as you can see, QQQ is up 12% this month. That means if I had this account set up like I do my Roth, where I have like 50% of my money into just the base ETF, and then I got like my picks, I would be up way more money. My account would probably be over $2,000 or $2,000, like $20,000. Maybe not that high, but like, you guys get what I'm saying. So that's something that I want to, I'm making a note for myself in the future. Future Nylock, I hope you take my advice. But I want to get more into QQQ. I kind of want to build my Robinhood account more like my Roth, because again, I do believe the Roth is the more stronger, better account. Obviously, that's what you want for a long term. However, I do think I can still take more, like that. My Robinhood is more riskier investments, but that, again, that's more of like leaps and options and stuff. But I still want to have that foundation of where I'm growing consistently. Because right now I don't have like that foundation on this account. I just have my picks, which are all over the place. And again, I'm not any better than any of you guys at picking stocks. Okay, I try to do my research. You know, I look at basically just dips and if how the market sentiment is kind of going. But I'm not like going into analytics, right? I'm not not listening to their earnings calls, right? I'm just kind of going off what I think is best, right? And who am I? So for my future self, I'm going to try and get more into the QQQ on this account. Because again, S&P 500, I had them both in my Roth, but then I ended up just going with S&P with VU, because I don't know. It just was a little bit more, like, I wanted just the S&P with like the Qs being a little bit more riskier, even though they're a higher growing, which it probably should have just kept both. But I digress. We're going to keep Qs on Robinhood, SP in that one, and, you know, it'll be easier for me to track. So let's go over real quick. This is one of those things where I don't love about Robinhood is I can't like look. So if I go to stocks and ETFs, it'll have what I made. So like since my Netflix option has been going down, if I just had the stocks, right? If I just had the base stocks, I was actually up 7%. I'm almost up $1,000 in the past month. But I have my option. We'll go over that here in a second. But it also doesn't show me like how much I made that month it doesn't show me how much I made in that specific stock for a month, right? You guys saw on M1 Finance, I can like switch it to like 1 month and that show me exactly how much I made for that month. So it's one of those things. Again, Robinhood's easy in the sense of like you can purchase and you can find the stuff you want and purchase and buy and sell really easy. That's why they do that, to make you buy and sell more, just so you know. I do like that fact where I can buy and sell easier on here, but it is kind of harder to like track your growth. Again, it'll show you, like, again, you can just look all time, but that doesn't really give you a show of, or sorry, not all the time, but like year to date, month, week, like that just shows you the whole thing, right? So if I wanted to if you want to look at how much I made in AMD, I have to go to AMD. It just says the total return at the bottom, but it doesn't, like if I go to 1 month, right? It'll show me how much it went up in the month, but it's not showing me exactly how much that made me in that position, right? That's why I love M1 Finance, is it has like that weighted gain return. It'll show you exactly how much you kind of made in that specific month, in that specific week, in that specific year, with that specific stock. So I'm just gonna kind of go over the ones that are like up right now. As you can see, AMD was up 50% this month. I'm up almost $1,200 in that position alone. This is one of those positions where I think it is up extremely high. I just don't know if I want to. I don't know if I want to cut it. Could he? Some people are really not a fan of, you know, trimming your winners per se, because again, it's like you're trimming your winners and then, you know, to do what? However, in this case, like, I want more bankroll in Robinhood because again, I'm not adding to positions on Robinhood at the moment. So I think I might trim a little bit of AMD to put in the Qs. Again, I want to build that foundation up for the Qs. So again, it's more consistent growth instead of, you know, kind of all over the place and more, because I'm assuming AMD is in QQQ. Don't quote me here, but I'm assuming that's already in there. So I would still be exposed to AMD even if I put it into QQ. Obviously not as direct, but I am really happy with that being up. Again, I'm still into Meta. I still think they're really a good buy. Just overall, I think they have really good growth potential, but they have been down, or they're actually up. They're actually up 5%, it says on Robinhood. I don't know why it said. Maybe it was when I was buying Meta on M1 Finance, why it was saying it was down, but whatever. Nvidia up 5%. That's cool. Again, AMD, as you can see, up 50%. Like, that is insane compared to these. Like, Meta and Nvidia are like giants, right? AMD is also a giant, I will say, but like 50% is kind of unorthodox. Again, it's one of those things. Like 50%, you almost doubled your money from that investment, you know, in a course of 1 month. So like, is it worth it to take the money? I don't know, y'all. I don't know. I'm just a guy trying to make some money. Okay, so you guys let me know what you guys are doing with AMD stock. I might take some gains. I might not. I'm still up in the air. Netflix down almost 7%. Really sad because it was going up. My option was looking really good. I'm still up in the position in the underlying stock, but as you can see, the option has been rough. So it's still good until the year 2027. So, you know, I had a vision for the stock. I bought the option. You know, it's been going down. I don't want to panic. I don't want to panic sell. I just want to see it through. You know, you got to see it through, my boy. So we're going to see it through, and it's one of those things, like, you don't want to sell at a loss. You also don't want to sell too high because, again, I had that Google option where I sold early, and I really could have probably made more off of it, but it's one of those things. It's like, you know, 6, 7. I would rather take profit at, you know, a 300% gain and lose like another 200% return versus panic selling at a 70% loss, and then it goes back up anyway. So I'm always determining. I never know. Like, that's the problem with options and trading in general, is you need to have an exit strategy. You need to have a plan. That's why I think it's better to just no thinking involved. Just go with the flow. I said I was going to buy the sleep option. I said I was going to let it ride out up or down. It's really that simple. That's what I'm going to do. Now, again, when we get closer to the date and shit like that, like, shit might change. You know, if I'm up 800% on the option, like, what are we doing? Like, I might just either buy it or roll it, whatever. Right now, just stick with the plan, not your feelings. That's what we're doing to the Netflix option. But it is hurting us. It is hurting us. But again, it's already lost like $700, almost $800 in equity. It's only got $1,100 left in equity, right? So, like, I've already eaten like almost 40% of that. And if I lose another $1,000 in it, it's like, I mean, shit, I made $1,200 on AMD alone, right? So that's why you don't want to use all your money in options, because again, if I had my whole portfolio in 1 or 2, you know, Netflix options, my shit would be looking real rough right now. So always do, or common knowledge for people who are trading options, you never want to do more than 10% of your whole portfolio in one option. Because again, if you lose 10% of your portfolio, that stings, but it's not like you can't get that back. Again, QQQ went up 11% 1 month. So you would have, in theory, if you would have lost an option, even if it was a month out long option, Jesus Christ, I can't talk today, you would have still made that money up. Like, you would have been even, per se, because you would have made that money back in the Qs, but lost it in the option, right? So, again, and then if the option hits, then you're up. So it's like, that's the risk you take with those. So again, I'm going to just see it through, but that's where it's at. We also got Google in this account, up $750. It's up 2%. Uber down 4%. I'm down on that. Salesforce is starting to go up, but it has been up and down, and it's been really down this past year. I still trust them though, but yeah, overall it's been rough. I just want to go over some quick ones. Don't want to go too much into this. But yeah, like AMD was the biggest one I think we needed to really talk about. All the rest are still kind of doing their thing. You know, I want to get more into ASML. I don't have a huge position in them. Pause. But you know, they're up 14%. So again, it's hard to like invest in that right away. But again, dollar cost average, it's really not, you don't want to think about it too much. Don't think about it too much. But that's doing good. I need to get some more shares in there. And yeah, I think everything else has kind of been pretty average. I will say my DraftKings position, it's up 6% this month, but as you can see, my DraftKings position has been rough. I might be selling out of that soon. I just don't see, it's not really hitting for what I need it to. Like, I don't really know how to describe it. Like, I don't know. I can't explain to you why I got into it besides the fact, like, I just figured DraftKings has so many people betting on it all the time that they should be making money. But I don't know, like, how their business operates enough. Like, are they spending too much on advertising? Are people winning too much? Like, why aren't they making money? Why aren't they making money? So I saw that it is legal now. It's now in all in 50 states. But again, it's just like, what's wrong? Like, why is the stock not going up? Like, I'd rather just own QQQ. So, like, what are we doing? Why are we putting our money in DraftKings? So, anyway, so overall, again, like I said, we're up $455 in the month in total. And yeah, so next we'll go over Coinbase. This isn't the right screenshot, but I already put it in my Google Sheet. But our Coinbase portfolio is at $4,501.60. Didn't buy any Bitcoin or anything this month, so I'm actually down $367.83, which is almost 8% loss in the portfolio on Coinbase, which sucks. But again, it's crypto. It's gonna happen. Can't be thinking about it like that. More speculative bets anyway. Like, I don't have like a stupid, as you can see, like, that's not 4,000 out of the 46,000 that we're at is a inch in the bucket. Like, we're just seeing it. Like, if Bitcoin goes up to like 200, 300K, like, that's gonna be insane. Like, Coinbase value is probably gonna be like 20K at that point. Then I'm up. Then I'm feeling good about life. But it's just one of those things where I'm trying to keep it chill. I still do believe in Bitcoin and stuff, but I just didn't add to any of it this month. I was more focused on the Roth. So let us do some math. So I got the sheet. As you can see, this is the overall performance. So I got the Robinhood 16,205, M1 27,345 in Coinbase. So as you can see, we are at a total of $48,025.80, which is about $1,100 gain, which is about almost 3% return month over month. So pretty decent month. Again, feel like it should probably be a little bit higher. It could be a little bit higher, the whole portfolio, because again, I should be more into the regular Qs and the regular S&P 500, but I'm not going to complain about seeing money go up, brr, right? So shoot another video because I've been talking way too much, clearly. Anyway, overall, I think the market is up a lot. I'm still very cautious. I know Warren Buffett has the most money he's ever had on the sideline. I think that's kind of a weird thing to say, though, sometimes, because it's like, I feel like every year would be the most money he's ever had on the sideline, right? Because every year he's making a shit ton of money. So if he ever pulls out and is waiting, it's gonna be, I don't know if that's just me, but I do kind of feel that. I'm not sure how I feel about it overall, but again, no one's gonna be able to predict the market. That's gonna be said time after time after time. The best thing you can do is just get in. Time in the market is going to beat timing the market every single time. So you know what I'm going to be doing next month. I'm going to be investing, hopefully to get some more. I really liked when I had 1,500 in last month. So I'm going to try and get up to that. I like that $1,000 mark. And if we keep doing that, we will definitely have the Roth filled. And then we can start adding to that Robinhood and, just getting more money into the market and, getting to our goal of 100K. So guys, thanks for watching, and let me know what you guys are doing with, markets at all-time highs. And if you have any suggestions, if you have any concerns, if you have any extra money to give me to invest in the market, please help the channel. But anyway, I appreciate you guys. You guys have a good day and stay blessed.